I don't know how things are in Ohio today. I'm a little north of you, but it's almost sunny out, which is nice because we didn't get spring. We had winter a couple of weeks ago, and now we're rolling into summer. I assume Ohio has the same issues. We've got a little less than 10 minutes before we begin. We'll begin right at noon. So if you need to go get something, you've got 9 minutes left. We're going to start in about 6 minutes. While we're waiting, do any of you that are already in here know about any good trucking business related podcasts? I'm looking for a new podcast to download all the time, and I don't know that I've seen one. There are trucking ones, mostly for the drivers, which is great because the drivers are most of the employees. But are there any trucking run your business better, run your operation better, any of those kinds of things. If any of you know of one, drop it in the chat box for me. I would appreciate that, and I'll go check it out. We spend a lot of time in trucking dealing with safety, and of course, safety, you have to have that, of course, but I'm looking for how to run your trucking business better, whether it's driver recruiting or it's legal advice or tax advice or business consulting, whatever. So if any of you know of one, you can put it in the chat, that'd be great. If not, so one of us listening can start one and we'll all subscribe. We've got about 3 or 4 minutes. We'll let some more people get into the room. We'll start at noon. We'll be done at 12:30. That'll leave some time for questions and answers as well, but we'll talk about that more. I'm curious for the Ohio Trucking Association members, are you guys more Indians fans or Reds fans? I'm a big baseball fan. I was at the last 3 games at old Cleveland Municipal Stadium when they played the White Sox in 1993. It was a riot, 72,000 people at each game. Okay, we got about 30 seconds and then we're going to start. Like I said, this will take half an hour end to end. It's important, but there are a million other things you probably have to do at your trucking company, and I get that. So we try to be brief. Okay, it seems like time to start. Today we're going to talk about the new tax law that was passed in December of last year and how it affects per diem and how we can take advantage of that as well as we can. So we'll get that truck out of the way. Just a quick little bit about me. I'm the founder of Superior Trucking Payroll Service. I used to work for, I was the CFO of a trucking company. So I've sat on that side. Now I sit on this side of the payroll window. Here's the agenda for today. We're going to talk about what's changed with per diem. We're going to talk about the advantages of paying per diem, financially and otherwise. We're going to talk about reasons you may not want to pay per diem to a driver, then time for questions. All right. HR 1 from 2017, an act to provide for the reconciliation pursuant to Titles 2 and 5 of the concurrent resolution on the budget for fiscal year 2018. That's a mouthful. That's the big tax bill they passed just before Christmas. Some of the impact things I've listed here, lower tax rates, the marginal tax rates drop, corporation taxes drop to 21%. There's the child tax credit doubles from $1,000 to $2,000 for dependent children 16 years of age and younger. There's no more personal exemptions, so the $4,000 or $4,050 exemption you were getting for each person in your household goes away, but you get a higher standard deduction. So a lot of people don't itemize anyway because mortgage rates are so low compared to when they wrote the tax code. Last major revision was 1986, and mortgage interest rates were 8, 10, 12%, and now they're 4, thereabouts. So a lot of people don't pay enough mortgage interest to benefit them. And then there's the one why we're here. There's per diem. By the way, this tax law obviously is much bigger than this. My point is to focus on the per diem. If you want to have a discussion about other impacts to businesses or personal, I can refer you to people. They're experts in, especially in trucking, and I'm happy to refer you to them, but that's not the point of this webinar today. Did per diem go away? You've probably seen a number of articles in a number of publications or web magazines or whatever you want to call those, talking about how per diem goes away. Well, it does and it doesn't. It goes away in the sense of a driver who was a company driver receiving a W-2 from the motor carrier. If the motor carrier didn't pay them per diem or short paid them per diem, they could deduct the rest of it through Form 2106 as unreimbursed employee expenses. And then that would be subject to a 2% floor. And again, I'm kind of getting into the weeds of the tax things, but I kind of want to just give you a little bit of background on it. And then so they could end up getting a deduction ultimately for about half of their per diem after everything was said and done. There's all kinds of moving parts in there relating to your household income, like if your spouse works and things like that. That part's gone away. That's gone. Other, the 2106, all that stuff's gone. So the driver, if you're not paying per diem to your company drivers, they're going to lose out on the deduction that they were getting up to this past year and the taxes they might have completed a month ago. But while that's unfortunate for them, with a higher standard deduction, it's even that much less likely that they were going to take advantage of this deduction anyway, because they probably weren't going to itemize unless they have significant mortgage interest, significant charitable contributions, significant property taxes, And I know they all seem significant, but we're talking $24,000 combined for married filing jointly. And that's a high threshold to get over. So it would have mattered for some people, but most drivers it wouldn't have mattered. So for company drivers that deducted it themselves on their 1040, that deduction's gone. But business owners can still deduct per diem at 80%, like they've always been able to. Well, it's been able to for the last 10, 15 years. And that's important because they can deduct it not only for themselves, but for the drivers that they pay. And that includes owner-operators. Owner-operators are business people. They own their own businesses. So they can still take per diem if they're eligible. Little background on per diem. I put a link in right at the top there. We'll send you out all these slides. You don't have to write this down or anything like that. But trucking companies are allowed to pay their drivers $63 a day as a reimbursement for meals and incidentals while they're on the road. There are a couple of requirements. They must be in multiple meals and incidental markets. And if you drive 100 miles, you're going to be in a multiple meals and incidental market, especially on the east of the Mississippi. There's enough cities around that you're going to go there. You know, going from Columbus to Fort Wayne, you're in 2 different meals and incidental markets. And you have to be subject to hours of service regulations. The funny thing is they don't even say you have to log, because some people are subject to hours of service regulations but don't have to log because they're staying in the 150-mile radius. They don't say you have to log. They say you have to be subject to hours of service regulations. So what we recommend is that you pay per diem as a substitute for wage and save everybody a bunch of money. The trucking company, the truck driver, which is really the people we care about the most, those 2 groups. Per diem is not, it's 80% deductible for income tax purposes. So what I did was I made an example. We've got a driver, and again, these examples, I move them around, but 35 cents per mile may not be reasonable anymore, but it works for the example. And it's only going to be on the employee side, it'll actually lower their savings because you're probably paying them more than that. But an 8% work comp rate for drivers, I know Ohio is a monopolistic state for workers' comp, and your rate is probably lower than that, but you might have to buy coverage for other states. I'm not a truck insurance expert. Again, I can refer you to those if you need one. I'm happy to, I can give you a number of different people you can talk to, but I just use 8% for the example. The new 21% marginal corporate income tax rate, so we're going to go through that. And we got a driver, 2,500 miles in the week, 35 cents a mile, and he's out for 5 days. So he's got 5 days per diem. So let's walk through what it's going to do for the company here. We've got the gross pay is the rate times the miles is $875 for both of them. We'll go through the yes column first. What you did, instead of paying them $875 in wage, is you paid them $315 in per diem and the remainder as wage. So that left them, you know what? Those are old numbers. Well, we can still work. The example is still good. You have $560 in tax deductible wage, and then tax deductible per diem is $252 for you. Why we're going through this is you have $63 in non-deductible expense, which you have to pay tax on. That tax at 21%, because this I just changed this, is $13.23 that you owe an extra income tax at the end of the year for the trucking company at the 21% marginal tax rate. But you save $24.10 in Social Security by not paying it on the per diem. I didn't count unemployment savings because I figure you're going to pay the driver over the unemployment maximum anyway, so I don't even count that in there. And then your workers' comp at 8%, you're going to save $25.20 in workers' comp insurance on that driver in that week for being gone for 5 days. You net all these things out, and you're going to be ahead as a trucking company $36.07 based on 8% workers' comp. And the example that we gave, your company's ahead $36.07 per driver per week in this example. And 36 bucks sounds nice. That's great. But let's do some math now on that. I use 25 drivers as an example. You can all do your own math, or if you want to call me and tell me your work comp rate, your number of drivers. I'll do the math for you, but I'm sure you can probably do it yourself. But $36.07 times 25 drivers a week times 52 weeks, almost $47,000 in work comp savings, basically, in the year. Your company, it's one of the rare times that the accounting department, the payroll department, I mean, you're basically saving a full-time employee right there. And that's real savings. It's not 1/10 of an FTE or some kind of pie in the sky savings. You're writing checks for that much less between payroll taxes and workers' comp. And it's real money. It's a huge win for the company. And again, if you had 250 drivers, just add a zero here and it's $468,000. Again, your work comp rate may be less and you have to adjust for all those things as well. But again, the math is worthwhile. You know, it's significant. So if you want it broken down per employee, it's basically $1,875 per employee, $1,875 per employee per year. Multiply that by your number of employees, and you'll get the savings that you can deliver to your company. But as for most things, if the company makes more money, somebody's got to lose. Let's look at the driver, because you could just pay drivers less and you'd save money too, but that won't go over very well. All right, the same thing, same example as before, 2,500 miles, 35 cents a mile, 5 days out. The $875 wage, and then we've got the $315 in per diem. So his taxable amount is $560. He pays $24 less in FICA, as you can see between the yes and the no. He pays almost $38 less in federal income tax. I'm using he, but I mean he or she. And in state income tax, again, depends on your state. If anybody's listening from Tennessee, you can cross this line out. Or Alaska, Nevada, Florida, Texas, a few others. $13.39 is the savings in state income tax. So we go through all this math, we figure out their pay, then we add the per diem back in that we deducted previously. So they still earned $875. And their total paycheck is $75.29 more by getting paid per diem. That's a lot of money. That's the biggest raise that driver's ever going to get. It's $75 in their pocket every week, $3,900 and change every year, because they're having per diem taken out of their check and reimbursed to them. Usually this slide of the PowerPoint presentation, all you have to do is print this out and hand it to the driver and say, do you want a check for $779 or do you want a check for $703? That usually ends the whole discussion about per diem with them, because some drivers will have heard stories that they don't like per diem because of this reason or that reason, and we're going to talk about that. But $75 a week solves a lot of problems. That's a significant increase for them. And you saved money on it, which is the great thing about it. So you win as a trucking company. The driver wins as a person. It's the work comp insurance and the IRS that lose, but we're not concerned about them. Well, that's a whole nother webinar. You can give to them if you choose to. But yes, $75.29 they get extra in their paycheck. I listed out some other benefits. The big thing is, a lot of drivers know about this, and it should be on your driver recruiting page. It should be, assuming your company has a website, and assuming that if it doesn't have its own website for hiring drivers, I'm sure there's a page within your website for hiring drivers, and you talk about probably how many miles you can get them, and they drive new equipment, and they never go to New York, or whatever your advantages are. I would list per diem in there. I see a shocking number of trucking companies that don't list that in there. I would list per diem program. Those drivers know exactly what it is, and they're going to want it because it's $75 a week. And who wouldn't want that? And so I can't urge you enough to put that on there. But among the other benefits are, with a driver getting $75 more a week, you're going to have to advance him less. And I'm sure a lot of you advance on your fuel cards and already have a system set up to deduct it back, but you get drivers that are upside down from time to time. Just giving these guys 75 bucks more a week in their check is going to hopefully help reduce that. I make no promises, but some drivers will spend $80 more because they got $75 more, but you never know. And so it always helps. More money in their paycheck is going to reduce the amount of advances ultimately. Another part, just better morale and better spirit among your drivers, because they're going to see how you went to bat. You figured out a system to get them more money completely legally. This is all 100% legal, of course. And you look, we're going to go through some extra steps to help you to get you more money because we think you're worth it. The drivers can't complain about that. We all know drivers can find things to complain about, but good night. They can't. I mean, they're getting more money. There are some downsides that we want to discuss. One of them is the drivers. This is the old issue. The drivers were deducted on their own 1040s. Well, they can't do that anyway now. So that whole complaint goes away. They may not realize it yet. You may have to tell them as part of the whole HR1 that they can't deduct those anymore, and they'll find out next year when they do their taxes and be really sad. But it's not an option anymore. So if they want per diem at all, it has to come through the motor carrier, assuming they're W-2'd. And then the work comp claims get paid often at the net of the per diem amount because the work comp company will ask for the wage history, and the wage history won't include the per diem. It's unfortunate, but I don't know a lot of companies that want to pay missing wages any higher than they have to. They want the driver to come back to work. So it's unfortunate, but most trucking companies are not sad about that. They're like, just a cost of doing business, and it'll be okay. And hopefully you don't have that many work comp claims anyway. And then your payroll service needs to understand what you're doing, but yeah, we'll get to that. The best example of when not to pay per diem, and I'm not including things like when you're not allowed to legally, because you should never do it if it's not legal. But there are going to be some drivers that don't want per diem. I listed some of the reasons here: retiring soon. It does affect their Social Security payout, and that's absolutely true. So if you've got a driver that's in their 60s and they don't want per diem because they want to max up their Social Security benefit, totally understandable. A driver trying to get a loan and their W-2 shows making $35,000 when they really made $55,000 when you include per diem, the bank doesn't get that. We've done that. We've had some clients, employees call us about that, and what we've done is we've put together a letter for them, for the bank, explaining how this all works and how they actually did earn that, but we are able to elect to make some of that non-taxable. That letter is usually successful. I can't promise again for what any bank's going to do, but at least we can explain it. They're looking for an explanation, and we provide it. We're an independent third party. We have no dog in the fight whether they get the loan or not. So that usually helps a lot. Another example I didn't list is a driver who's just insistent that per diem is bad without actual reasoning. I'm just convinced it's a bad idea. Well, I can't convince you otherwise. I can show you the math and the $75 a week, but if that doesn't sway you, there's not a whole lot I can do. So I would say in any of those situations or any other one, let the driver opt out. I mean, yeah, you're going to lose the savings, the 30 some bucks a week on it, but you're going to keep the driver. And we all know the pain of trying to recruit and retain drivers. On a good day, it's hard. So let's not lose a driver, especially, again, assuming the driver is somebody you'd want to keep anyway. Let's not lose a driver over having to pay a little bit more in workers' comp and payroll taxes. It's the tail wagging the dog. So that's my idea there. Well, we're going to skip. I got a couple slides I'm going to skip because they're kind of salesy, and I'm not trying to be salesy. Before we go to questions, I got one other thought on per diem. If you look at those IRS regulations, they allow $63 a day Many trucking companies will pay either a percentage of the wage. I've seen a quarter, I've seen as high as 40%, or a rate per mile as per diem. For example, instead of paying 38 cents a mile, they'll pay 28 cents a mile as wage and 10 cents a mile as per diem. Both of those are legal as long as the amount you pay in the day does not exceed $63. So if the 30% of wage or whatever number you use is less than $63, you're fine. But you're not maximizing your savings on the workers' comp and the payroll taxes. If it's only $40 a day that basically they end up getting, if they get $200 a week instead of the $315, it's $115 you're paying payroll taxes and workers' comp on. You're losing about a third of your potential benefit by paying per diem. And the driver's losing because instead of saving $75, they're only saving 40 or 50. So I would really recommend that while those other things are legal, if you underpay, you're cutting yourself short. If you underpay the miles or the percentage, and if you overpay, for example, I've got clients that do 40%, and sometimes they end up overpaying. If you don't have an adjustment in there to make some of that per diem taxable, you're outside the IRS regulations, which is a nice way to say illegal. Again, I don't see the IRS beating down your door about it, but I want to make you aware of it because paying by the day is the way to maximize your savings and stay legal. And we all have enough headaches. It's trucking. There's always headaches. But if we can make one less headache by paying per day, I really recommend it. That's most of what I have to say. We've got 9 minutes left, 8 minutes left, according to my phone. So we have time for questions. If you have questions, you can put them in the chat box. That should be in the go to webinar setup there. If I can't get to it today, I'm going to send all of you a copy of this webinar, of the slides. My contact information's in there. You can call me with a question or email me with a question. We're happy to talk to you about it. Even if you're not a client of ours, even if you'll never become a client of ours, it's fine. We'll still talk to you anyway. This is about spreading education and helping trucking companies use best practices. So I've got a couple questions in here. I gotta get my glasses on just a minute. One of them is, what about 401k contributions? 401k contributions are gonna happen either way. And again, I'm assuming that the person who asked a question meant traditional 401k and not Roth. All those things are gonna lower taxable income, which is gonna lower, it's gonna lower taxable income, but it's instead of lowering it from the 875 down to a lower number, depending on how much they deferred, it's going to lower it from 560 down to a lower number. The tax advantage of the 401k will still be there. It will be slightly less because you're in a lower marginal tax rate, generally speaking. But it's still, and I didn't include that in the example because I didn't include the drivers having 401k because not all of you offer 401k and not all of the drivers will use it. I wish they would. It's a whole nother webinar that we've done before about driver recruiting and retention. Get them a 401k plan because it's not that high cost, and you'll get drivers that are going to be more financially responsible. But I'm kind of teasing another webinar there. And then there's a question about lodging deductions. If you pay your drivers to go to a hotel, that's separate from this. Per diem is for meals and incidentals. It's for food and toothbrushes and deodorant and other incidentals. But lodging deductions, like lodging, I'm assuming lodging being reimbursed, like the trucking company reimburses the driver because they had to spend the night in a hotel, whether they're driving a day cab or some other situation where they got to sleep in a hotel. That's still completely reimbursable and non-taxable to the driver. That doesn't change. It's the meals. If you're reimbursing for meals, you got to not do that. That's really per diem. But if you're reimbursing them for lodging, as the question asks, That's not affected by per diem. Let's see. Someone asked, can I simply subtract $63 per day from the gross pay and call it per diem? You can, but you need to give it back to them at the end. And that's kind of what we did. That's exactly what we did in the example, is we took 5 days times $63 and we took $315 out of their gross and gave it back to them, and then as after the deductions and the taxes and all that. The very last thing we did was give them back that $315. Just make sure you give it back to them. I have seen situations where, I don't want to name names, but another payroll service, nationally known, did all the deductions and forgot to do the reimbursements that week. That's a lot of angry phone calls to you guys, and one angry phone call probably to them. And then they got to sit and write checks, and they got to try and fund everybody's card and all the fiasco that goes with that. So yes, you can, and that's exactly really what we're doing. I'm glad that you figured it all out, really, is deduct the 63 a day from the drivers. What we recommend to our clients is that you send us number of miles, and we already have their rate probably if you pay by the mile. Other income that they got, if they got stop pay or unloading or whatever, or detention, and then you tell us number of days, and then we'll subtract the 63 tax amount, give it back to them. I'm doing hand signals, but you guys can't see that. Let's see here. Can you address what kind of driver is allowed per diem? We have local drivers and over-the-road drivers. They are company drivers. The drivers that are allowed per diem are the ones that are in multiple meals and incidental markets and are subject to hours of service regulations. My advice is the local drivers are not eligible for per diem. If you want to be really aggressive, you can go for it. It's not my recommendation. Really, the drivers that are gone overnight, those are the drivers you really want. There are cases to be made for a driver who's gone all day. Like they max out their hours and they're never home, but they get home at night, basically just sleep in their own bed and do the same run every day. There's a case to be made. It's a case-by-case situation. If to the person that asked the question, if you reach out to me and we can talk more about your situation. But yeah, the over-the-road drivers for sure. These are the meat. These are the target of this thing. The local drivers are trickier, and I would not advise paying. Generally speaking, defining what local is, to me, local is the guy or woman driving around the city you're in. That's not going to be subject to per diem. And, okay, here's another question here. I'm going to try and go through these quickly. We've got a couple minutes left. If I don't get to your question, email me, and we'll get back to you, because these are all great questions. In order to receive per diem, they have to be out overnight, correct? Generally speaking, overnight is the best threshold that I encourage people to use, but you can use both days. For example, driver leaves today, pulling out of the yard in a couple hours, drives 500 miles, whatever. Overnight, unloads in the morning, gets his reload or her reload, drives back, is back in the yard, not even 500 miles, drive back in the yard tomorrow afternoon. I'd pay 2 days per diem. I'd pay today and tomorrow. The IRS allows for that. Okay, is it okay to offer per diem to local drivers? I think we covered that. Please define again when you can utilize per diem for a driver, when you cannot. I believe, it's the drivers that are gone overnight are the best example of it. They really are. Those are the people for whom this per diem is intended. Again, I think there's a case to be made for drivers. I'll call them local drivers, but say they drive, I'm going to get my geography bad here, but say they drive Dayton to Cincinnati using my Ohio friends geography. It's like, what, 70 miles-ish? And again, forgive my math on the geography, but you're in a whole other city. If they drive to Dayton, spend the whole day, or if they start in Dayton, spend the whole day in Cincinnati making deliveries and drive back to Dayton for the night, and they're gone, they're maxing out their hours. I think it's a doable case to pay in per diem, but it is a little touchier. And we can go, like I said, we can talk about your situation as you have it. Okay, I just got a question. Can driver get per diem going from Akron to Columbus? To me, that's like the Cincinnati Dayton one. if they're gone all day, I mean, the idea is that you can't take time for meals, and so they just reimburse you. So, okay, I'm gonna go through a couple more quick ones because it's 12:30, and then I promised you I'd be done. Should you have the driver sign something opting in or out of per diem? I would have a company policy saying that my advice, and again, you can do this completely backwards. I would have a company policy that we pay per diem, and I would make them opt out. And I would be totally cool if they want to opt out. I wouldn't beat them up about it. I would maybe ask them why, especially if it's a younger driver. And if they want to opt out, they opt out. They can always opt back in later. Is per diem excluded in the workers' comp calculation in all states? That's an excellent question. The per diem is excluded in the workers' comp calculation based on your insurance policy. Check with your insurance agent to verify the deductibility. Generally speaking, it is. Some insurance companies will restrict the amount of per diem you can deduct to what's called the NCCI average, and that's a whole insurance thing, and it's a whole other webinar done by someone who's not me because they know more about insurance than me. But they only allow $38, $40 a day. But again, check with your insurance agency, with your agent. If you don't have a trucking specific insurance agent, ask me for a referral. I don't get anything for it. I'm not trying to boost up some commission for me. I only want to help you guys, and I'm happy to refer you to a number of different people, and you can ask all of these questions. Okay, last one, because I'm running out of time. The day for per diem count needs to be split by quarters. No, you pay the whole day. You just pay the whole day. If they left, it's 12:30 here. If they left right now, you pay them for today. Assuming you didn't pay them for today because they rolled in today. Like if they had their 34 off or whatever and it ended and they leave at 2 o'clock today, pay them for today. You'll be fine. To the rest of the people who ask questions, I apologize for not being able to get to them. If I have your name in the question, I will email you back an answer. I have some names. Sam at the Ohio Trucking Association was awesome with rolling the questions through to me as you guys were sending them in, and most of them have names in there. So I will try and get back to you. But I try to stay to my word on this 12:30 thing because I know you guys are busy, and I don't want to mess you up. So I appreciate you all coming. Thank you to the Ohio Trucking Association for allowing me to share this information with you. If any of you have any questions at all, feel free to call me. My phone number is on the screen right now. I will email you this whole webinar so you'll see it. I believe it's being recorded as well, and so through the Ohio Trucking Association, for the members, you may be able to get it, which will be great for the members that couldn't attend today. And like I said, any other question like this, even if it's tangentially related, we're here to help. That's what we do. Even though we're from Michigan and you're from Ohio, we're not one of the blue and yellow guys. We practice football. I'm from Michigan State, so we practice football against them just like you do. It's nice to know you have a win on your schedule. Not really been a problem for either of us other than us last year, but it's always good to talk to my Buckeye friends, and we can talk about our disdain for U of M any chance we get. Well, thank you for coming. I really appreciate all of your questions and the time to talk to you. This ends the webinar. I hope you have a great rest of your day, and I hope that your trucking company is having a great May. Thank you very much.